Hi friends, today we will discuss about the super deduction. We all know that government has declared a super deduction allowance and special allowance during COVID period. That is 1st April 2021 to 31st March 2023. During COVID period, to encourage the business, government has introduced super deduction allowance and 50% special allowance. Now, after spring budget, government has ended the super deduction allowance. So let's understand what is the calculation after 1st April 2023. So we can say that the treatment of super deduction after 1st April 2023 means if your year-end account is running, say year end is 31st July 2023, means your year-end start is 1st of August 2022 to 31st July 2023. So, April, May, June and July, 4 months is covered after 1st of April 2023. So, we can calculate super deduction allowance on apportionment base, say overlapping period before the 1st of April 2023 and after the 1st of April 2023. So, it is calculated the formula which is designed by HMRC government. The formula is divide the number of days before 1st April 2023 by the total days in the year-end period. Means whatever days to be calculated before the 1st of April divided by number of days. We can say that year end is 31st July 2023. Then April, May, June, July, 4 months period total days and 8 months period total days before the 1st April 23. So the 8 months days is, we can say 243, right? Divide the total days in the year-end period. So total days is 365. So we can say that 243 divided by 365 is equal to 0.67. Then the second is multiply the amount by 30. Means whatever the output is come, then you can multiply by the amount of 30. So we can say that 0.67 into 30 is equal to 20. Now the third point is add 100 to the above result. Means the 20 plus 100 is equal to 120% is qualifying expenditure. So out of 130%, we can say that we can claim 120% is a qualifying expenditure. Say for an example, if company plant and machineries for 3200 buy in the year end 31st July 2023. So qualifying super deduction allowance is 3200, say 120% is equal to 3840 is your super deduction allowance. So we can say that instead of 130%, we can claim 120% as a qualifying expenditure, right? Now, what after disposal the assets? If super deduction asset disposed in the same period, means if any asset is disposed during this year end, then same rules apply. Means these rules also apply in the case of disposal of assets. So whatever balance sheet charge is come, that is add to your taxable profit. Means the disposal, after the disposal, the balancing charge is added to your taxable profit and the same rules is applied. Now the government in spring budget to ended the super deduction amount and implement the full expense plus 50% first year allowance from 1st April 2023 to 31st March 2026. So we can say that how to calculate capital allowance. So capital allowance is a sum of below 4 items. Means what is capital allowance? So total of below 4 items is called capital allowance. So what is? The first is 100% first year allowance. So out of 135% super deduction, you can claim full expenditure, that is say 100% first year allowance, except you cannot claim lease and hire purchase are not available in first year allowance. And this first year allowance 100% up to 1 million per year, it is a limit which is decided by government. Second, 50% first year allowance which is extended till 31st March 2026. Then so you can say 50% out of 100, 50% you can claim as a first year allowance, and rest of 50% you can claim as a return down allowance, say 66%. Then main rate pools and special rate pool, both are called as WDA return down allowance. So main rate pool is called 18% and special rate pool called 6%. Then small pool allowance. Small pool allowance to be claimed is a 100% if WDV is less than 1000 pound or less for the year. So all of four the total you can claim as a capital allowance for calculating corporation tax during the year. Now what if someone buys a motor cars? So you have claimed a motor car in different rules, that is new or unused motor car if CO2 is less than 1 km but does not exceed 50 km, then you can claim 18%. Motor car if CO2 exceeds 50 g or less km, then you can claim 6%. First year's new and unused motor cars if CO2 emission are 0 km or car is electric, then you can claim 100% allowance. If second hand electric cars, then you can claim as a main rate pool for 18%. So who can claim this? All AI is available. So the AI is available for limited companies, partnership, limited by partnership, that is called LLB, sole trader or freelancer. So friends, this is all is called a calculation of capital allowance and super deduction allowance. If you can any question or query, then you can directly call me on my number, that is the accounting guru 94273 61966. I have total 23 years experience of BPO and KPO industries. So I can give my 100% what is I have learned during the 23 years, that I have to explain over to you. Thanks my friends.